Yo, what's really good, people? Welcome back to the channel. Listen, first of all, I want to kick this off with a sincere apology for the lack of trading 2-1 Tuesday updates over the past few weeks. There were a few technical difficulties during the first couple of weeks, and then I think last week and so forth, it was just mainly due to time. So yeah, apologies for that. I had a few messages about, are you going to continue doing this update? Have you canned trading 212? Have you deleted the app, etc., etc.? Definitely keeping trading 212 for reasons we will go in on these videos, and definitely keeping the pies, definitely keeping this portfolio. Nothing is changing, and I will make an effort to make sure that these updates continue on a weekly basis. So yeah, in today's video we're going to do a portfolio update. Let's consider this a recap video, considering that I haven't been around for the past couple of weeks with these updates. So I'm going to go through my investments, go through my portfolio, go through my pie situation, so you guys can see how the pies are performing and how I feel about, you know, the individual holdings within the pies, and am I still confident I made the right decisions, and you know, all of that good stuff. And then yeah, we're gonna probably wrap it up there. That should probably take us to, I don't know, we can ramble on. It might be about 10 minutes. Who knows how long this video is going to be. So yeah, we shall see. But yeah, if you want to know all of that plus more, please like, comment, subscribe, help the channel get to 8k subscribers. Follow on Instagram and Twitter at Infant Investors. And if you're wondering what application I'm using the Trading 212 app. Click on the link in the description and the pinned comment, sign up, and you will get sign up rather. Let's get the grammar correct. Sign up and you will get a free share of up to £100. And listen, it's definitely legit, man. Most of the money you see in this portfolio, I haven't actually invested myself, as in it's not from my hard-earned money. Most of it is from free shares that I've liquidated and then either kept it as free funds, which is £300 you can see here, or I've put into the portfolio. So you can see that at the current moment my portfolio is returning a loss of 4.87%. Now I'm not going to make this ultra confusing for, you know, people that are watching this. I'm just going to explain this once, but you know, from here on in we will just go with the figure that it says here. So at this current moment my portfolio is losing 4.85%. If you base that off, you know, my investments irrespective of where the money came from, then obviously that is absolutely correct, and obviously my choices have caused it to be losing 4.86%. However, if you base it on the fact of how much I've actually put in, which is only about £350, I believe I checked, then obviously I'm probably like 200% up, but I just think that's going to be a little bit meaningless. So irrespective of where the money comes from, we're just going to go based off this figure. But a lot of the money that goes into this portfolio actually is not coming from, you know, my salary or my hard work or anything like that. It's coming pretty much from, you know, free shares and stuff that's just getting funded into this portfolio. But yeah, let's start with the update on the portfolio. So as you can see, total amount in the portfolio is £1,286 at this current moment. £300 is ready and available to invest. £986 has been allocated. Of the £986, that's the current value, but the invested amount was 1,036. So currently I'm losing about 50 quid on this portfolio, which is about 4.91%. Now obviously the market's still open, so you will see continuous movements with that. Now currently here you can see all of my investments, which I'm going to talk a bit more about when we go into the pies, because one improvement, you know, maybe some of you guys might like this, I personally don't like it. None of these are individual investments for me bar one, and it's the one individual investment that's actually causing the loss here that you'll see, which I'm going to explain in 2 ticks. The rest of these actual investments are actually all fractions of pies that I currently hold. So they show it here as well as in the pies. I personally don't like that. I would much rather see it just in the pies, just because it's neater, it's just tidier. It just shows you, you know, that is actually how I've chosen to invest into these specific securities. So if I've chosen to invest into a specific security via a way of a fund, then I shouldn't see it independently. For me, I see it like I've invested in the S&P 500 ETF, but then my portfolio shows me all the 500 holdings and what my return is on all of those 500. I know it's not exactly a like for like scenario, but that's how I'm currently viewing it at the moment. So yeah, I'm not really a big fan of this. The actual only stock that I've individually invested in on the investments tab is Lemonade. So yeah, Lemonade came out, they did their IPO, they were soaring up. I got a little bit giddy, got a little bit excited. I did a bit of a Nicola situation, took a bit of a punt and put a bit of money into it. So if we click into it, you'll see that I bought 5 shares in Lemonade. Oh no, wait there. Yeah, so what it does here, it shows I put 5.07 shares manually and then 0.34 in pies. However, the pies is fine, that stays there. However, it doesn't show that I made a couple of rounds of investment into Lemonade. I'm not sure how to potentially see that on Trading 212. I'm still learning this application, but I'm sure it's straightforward. So I will figure that out. Maybe it's in the history tab, but yeah, it doesn't show it on the actual details page. Like in Free Trade, it shows you all of your individual entries. It doesn't do that here, and yeah. It doesn't bother me too much, but yeah. So Lemonade was the stock that I basically bought. It was soaring up, and then obviously at the time I bought, it was around the 82 mark, I think, and then it obviously just basically carried on going down. Now I'm not worried about that slightly. Obviously, for a number of reasons. One, the holding relative to my investment portfolio, not only in Trading 212, but across all of my investments elsewhere, it's obviously a smaller amount, so it's not the worst for me from a allocation standpoint. But 2, Lemonade I think is going to be a really good business in the long term, and I do think that they are going to make strides in changing the insurance industry. Currently, when you actually look at Lemonade's products and services, they've only got 3 insurance products. They've only got renters insurance, which for those of you that don't know, that's an American type of insurance. It's basically like contents insurance for renters, but they call it renters basically rather than contents insurance. They've got homeowners insurance, which is a mix of say contents and buildings insurance in the UK, if you want an equivalent. And then they got pet health insurance. So one thing I know is that during this COVID period and just generally speaking, people will always look after their pets. Like pet lovers out there, crazy man, like they're not going to let anything happen to their pets. So I know for a fact that that's going to be a stable part of their revenues going forward for people that are pet lovers and pet owners. And obviously that's one of the newer products that they've basically introduced. But just from an insurance product standpoint, they've got so much more products and services that they could potentially offer into the market from an insurance perspective. And that's just the 3 that they've got at the moment. They've got quite a unique moat in the fact that they give you kind of like a fixed subscription type price. And then any difference from the profit, I think a percentage of it goes to charity. So people feel like they're actually doing something sustainable and they're doing something good for charity and for philanthropic or whatever the word is. Yeah, philanthropic efforts or whatever it might be. So yeah, I think long term, I think Lemonade will be okay. Obviously, from a revenue standpoint, they are a loss-making business, which is part and parcel with startups. But yeah, I thought Lemonade was a pretty cool business. I hold a couple of insurance businesses in my free trade portfolio, Aviva Legal General. They're obviously a bit more of the traditional insurance businesses, but I think Lemonade has so much scope to grow. When you think of car insurance, when you think of gadget insurance, when you think of travel insurance, when you think of life insurance, maybe when you think of so many different types of insurances that they could add to their offering. And then not only that, just expand into different territories and different regions. So I think long term, very long term, which is one of the reasons why I do have a piece of it in the pie as well. I think Lemonade will be great, but honestly, I'm not going to be worried if Lemonade drops to 50, 40, 30, whatever, like over the next couple of days. I haven't put that much in it, and I'll just manage Lemonade accordingly. But yeah, that's the only independent stock that I've actually bought. The rest are part of the pie. So look at the pies here. You can see I've got the Kiddies Fund, Mississippi Mud Pie, DPMO, That's what my key lime pie, and then I got my kiddies pie, which is, you know, like my pecan tart or something like that. Who knows? Listen, at the moment, these are the three pies that I'm working with at the moment, and yeah, things are going well. So if you remember back to a few episodes ago, I mentioned that with the Certi Fund, I struggled to actually make the £300 deposit that I wanted to make in that fund. And you know, there was a few people that commented, so I appreciate all of the comments trying to explain maybe it's because you don't have enough in your free cash flow, being, or free funds, but you know, I say free cash flow because I'm thinking of fundamentals. But yeah, maybe I didn't have enough in the free funds. I had enough. Maybe I needed to keep a certain percentage extra. That wasn't it. And basically there was a few conflicts and stuff anyway. I figured it out. It was a Trading 212 bug. That is basically it. It was a server error from Trading 212. This is obviously a beta application, so you know there are things that are going to be broken. Anyway, tried it today and it has worked. So Certi Fund I invested in today. However, Kiddies and DPMO I've been investing for 2 months now. So I put 2 rounds of £100 in, which is basically what was the target for those. So yeah, let's do a recap on the pies that I've got. It's going to be a quick recap. If you want the full details, you know, see the previous videos. The links will be in the description, or you'll find it on the channel. But I will give you a quick recap into these pies. But at the moment, the Certi Fund, obviously, I'm not going to brag or nothing like this. It's only 0.29% up. And obviously I only invested into it today. But yeah, if you look at it, I'm obviously 0.31% up. The goal for this fund is about 35k. So, you know, £300 a month for basically 3 years, which is basically would work out for me putting in about 10 grand over a 3-year period, and then getting about, you know, an averaged return of, I can't remember actually, it should say it here, an average return of 58.65%, which should then get me to the 35 mark. Now, what you can actually see here as well is the fact that based off the goal of getting 35.56, you can see my projected value currently is actually only 29k. So this fund is technically underperforming based off the projected goal that was there at the beginning, which I think is a really awesome feature to actually see. So, you know, when you create a fund and you create a pie, and we showed you in the previous video, it shows you obviously what your projection is going to be, you know, and how much you can expect. But not only has it done that at the beginning, it's tracking you against that continuously when you actually hold this fund. So I think that's a really awesome feature, and you can see how well you are doing. And maybe, you know, you can put your fund manager hat on and decide, maybe I need to move something out or move something in. Maybe if you've got a numerical figure for a specific reason or a goal, then you might need to, you know, either, you know, rebalance your portfolio or add more stocks or remove some stocks, etc., in order to try and get to your goal. But I think it's a really worthwhile, not game, but, you know, mission. I say that's a really worthwhile mission to be playing to try and get there. But yeah, that's basically that. Now, in terms of the holdings, as you can see, I've got Amazon in there, I've got Tesla in there. Taiwan Semiconductor was a new addition, so I decided to add that in there today, just because of how well AMD has been doing. And I think Taiwan Semiconductor is an equivalent, obviously, within the Chinese market. I think it's also a supplier to AMD as well. So I've decided to include that in there. Fastly is there. Now, you know, obviously from a CDN standpoint, I do have Cloudflare in my other portfolio. And I think, you know, I'm, you know, more than happy with Cloudflare. And obviously I've got a bit of Amazon, which has AWS and all the other good stuff. But I just felt like maybe worth having Fastly in there. I'll let you in a bit of a secret. I actually wanted to remove Fastly for Splunk. But then when I did that, it showed me my overall portfolio projection and it reduced it. So it's not really feeling Splunk right now. So I thought, you know what, let me just leave Fastly in there. But I was thinking of actually removing Fastly for Splunk, but at the moment we'll see how it is and we'll just keep it going. We've got Nvidia, so yeah, there's a few chipsets, a few semiconductors in this portfolio, but I do like the businesses, as I mentioned before. We've got Adobe Systems. I think Adobe is a dark horse business. I think Adobe is a fantastic, it's not dark horse, everyone knows what Adobe is, but I think the way that they've kind of monetized their Creative Cloud yeah, I'm a big fan of that. So just from a revenue, from an investor standpoint, from a consumer standpoint, get a bit pricey, but from an investor standpoint, I think it's good. Added Square here. Obviously, I've got PayPal in my other portfolio, so I thought, you know what, be a bit different and get Square here, and kind of see how that goes. I've got the Trade Desk here as well, which is one of the things on my watch list that I will probably invest in this directly as a bigger sum within my ISA in free trade as well. I think I probably will do that. Trade Desk, Service Now are like the two ones that's kind of floating on my list to add. But it was already added here as well. And then Etsy's done well. Etsy's done pretty well during the whole pandemic situation. They had good earnings, their last earning update. And so hopefully that might actually continue. So yeah, that's the current holdings at the moment. Taiwan, Fastly, Nvidia, and Etsy's in the red. But Trade Desk, Square, Adobe, Tesla, and Amazon are in the green. So that is that. And you can see the little blue line, from my 35k goal. Long way to go. But you know what? It's a marathon. It's not a sprint. So, we're happy to just keep this running and seeing how we go. Now, the next one, DPMO. It doesn't mean don't piss me off. It means the development of premium monetary opportunities. You lot need to pay attention to what I was saying to you before, man. So in DPMO, I've only got 4 holdings in DPMO, which we're going to come to in a second. But just as a reminder, it's £100 a month into this. This one was a 10-year portfolio. So the goal of this was more speculative, but trustworthy, risky stocks. Now that is an oxymoron if ever I've heard one. Speculative, trustworthy, risky. But what I actually mean by this is these are more speculative stocks. They're not going to be fully based off their fundamentals and historic, earnings and performance. But what they are based is having a specific moat. They're doing something that's going to potentially change, that industry forever. And it won't sort of look the same. And, there's a good opportunity that, if those two situations aren't true, at least the other true situation is that it's a good new business that's actually going to be very strong at some stage in the future, maybe turn from an unprofitable to a profitable company. But anyway, I'm currently behind the projected value of getting to 400k in the next 10 years on this. I'm talking big numbers, like I'm really that guy, but it is what it is. This is long term, innit? This is very, very long term. And what it's basically saying, just as a reminder, after 10 years, me contributing 12.3k, the goal is to try to get to 400k. All of the maths here, I didn't make up the maths. Trading 212 made up the maths for you. So one thing I like about this is that, even if I miss this by 50% or I miss this by 75%, I'm still 6 figures up in 10 years time from this portfolio alone. So for me personally, the actual risk is quite limited when you look at it that way. Sure, I might not get to the 400k mark, but if I got to 100k just by putting in 12 grand over 10 years, then that for me is still a fantastic 10x return, which I'm going to be more than happy with. So I think it's de-risked just via the length of time, but obviously it doesn't mean I can be, too relaxed. I still have to monitor it, still have to manage the portfolio, so we shall see. So currently I'm behind the goal of 407k, but it's all good. Anyway, let's get to the holdings. The holdings we've got is Neo, Cloudflare, Virgin Galactic, and Lemonade. So Lemonade we talked a bit about before. Just to recap, I think Lemonade long term could has so much potential, absolutely so much potential. So yeah, excited to see what happens there. Virgin Galactic, listen, I think space exploration is something that even in my own personal mind, I find the fact that commercial space flights is even a concept or a thing, I actually genuinely really, really struggle with it, like in my mind. Not struggling to understand the fact that, there's a desire to do so and people are going to pay money to potentially do it, but struggle to really grasp the concept that one day at some stage in the future, men and women, men and women will be going up to space on a casual and returning back. I watched an interview with Chamath Palihapitiya. So for those of you who don't know, Chamath Palihapitiya, he's a Sri Lankan born Canadian citizen that was working for AOL, a few other businesses, but then he became the VP of growth for Facebook. And from my perspective, he was one of the main people that engineered the success of Facebook and where Facebook got today. So he's one of, I don't have idols like that because that's not really my thing. But he's one person that I definitely read up. I listen to his views on things, and I really rate him as an individual. Now he's the chairman of Virgin Galactic, and obviously, they've got a CEO. I've forgotten the CEO's name. Obviously, it's a Virgin business. There's no debt with this business because it's just backed by Richard Branson's billions. But he was talking about the vision, and he said it goes further than space exploration. What you're looking at here also is not just space exploration, but the potential to fly at supersonic speed. So you could potentially be in New York and go on one of their Virgin Galactic, I don't know if you can call it a plane, I'm going to call it a spaceship, go on a Virgin Galactic spaceship and then be in Tokyo within 2 hours, have your meeting, and then go on a spaceship and then be back in New York time for dinner. Now, I'm not going to lie, I think you'd die if that's going to happen, but, I don't know. We'll see. Like, Tokyo from the UK is 13 hours away on a British Airways flight. You feel me? So how that's going to be done in 2 hours and 2 hours back, do you know what I mean? I can't even get to central London in 2 hours, bro. Traffic be a beast out here. So how that's going to happen, I'll never know. But apparently that's the goal, and that's potentially one of the benefits of this. So there's going to be that kind of, supersonic, I guess, atmospheric travel or whatever. And I say that because you're going to be traveling so close to the Earth's atmosphere. The second thing he also mentioned is that the actual things that they learn through study and through trying to build space exploration actually creates technology that can be applied on Earth for a variety of other factors. So it reminded me of like one of my favorite movies, and I make no apology that this is one of my favorite movies. I make no apologies whatsoever. So you can get onto me in the comments if you want. I will badge you up in it. This is one of my favorite movies, which is Transformers. And in Transformers, there is a scene when all of I can't remember, what's his name? How's it my favorite movie? And I don't. Sam and his girl, Megan Fox, and then all of the army guys, and then all of the Sector 7 guys, and all of the, you got the Anthony Anderson, who's like the hacker, and then the other woman he was with or whatever. They all went underground to the bunker to basically see frozen Megatron and to see the cube, right? One of the things that the Sector 7 guy said that all of Earth's technology has been created over the last 70 years by reverse engineering the technology in the cube and within Megatron. So the fact that they could have lasers and, cars and, all of this other technology over the last 90 years. Now, obviously this is fiction, but you get the philosophy that they reverse engineered it by looking at that. And I see it as a similar parallel with Virgin Galactic. You could potentially reverse engineer all of the things that you're trying to do to get into space and actually make technology on Earth much better. Maybe that will help, flying cars come about sooner rather than later, or other things. Who knows? But anyway, I think the prospects for it long term could be magnificent. It is a punt, but we shall see. It is backed, and it's got intelligent people behind it that I trust, and because of that, that's why it's there. Cloudflare was there because, as I mentioned earlier, it's a business that's not profitable now, but I just think over the long term, over the next sort of 5, 6, 7 years, I think it's going to be a very, very I think it's going to be a profitable business probably within 3 years, I would say. And I think it's going to be a very, very strong business probably by 7 years. And then, I think the share price will be, it's 38 now. It could be 300, 400, 500, who knows, by 7, 8 years, 9 years time. So, that's going to be profitable if I continue to average into that. And then NEO, simply because that's, the Chinese Tesla. And again, I think that's doing well. Anyway, to sum up, NEO is the only one holding this portfolio up at the moment, but it's doing well. It's holding it up, so that's 12% up. While Cloudflare, Virgin, Galactic and Lemonade are down by 3%, 4% and 15% respectively. Anyway, overall, because it's a fund, it means I'm overall up on my DPMO fund by 3.37%. And obviously, probably next time I do an investment round, I'm going to try the rebalancing feature and see what that does, because as you can see, Lemonade, I'm only 8.14%, but my target allocation is 10%, and similar with the other ones. And Neo, I'm kind of a bit over subscribed, so we shall see. That just happens through the course of investing, and obviously as the prices move and then you do your normal round of investing, you will then go at the mercy of those prices. So that's where the kind of discrepancy will come. Last one is the Kiddies Fund. This is the fund for my unborn children that are yet to be born, but will come soon, inshallah. Now, listen, the Kiddies Fund at the moment is 2.66%. Again, it's just £100 a month fund. I mean, they don't even exist yet. Do you know what I mean? So the fact that, I can't be giving them too much money until they come, and man can actually, look them eye to eye in that. Do you know what I mean? Just feed them and whatnot. But at the moment, the Kiddies Fund is the best of all of the funds. It's doing the best in terms of performance. I'm on track with my goal, 100%. The goal is to get to 230k by 18 years, and that would mean contributing 21k over the 18-year period and getting up to 230. And again, similar to DPMO, if I get half of that, my kid's pattern. I never had no 100k at 18. I have £100 at 18, bruv. I'll tell you that from now, because I think I probably had 100. Let me not even say that. Listen, I had nothing. So if they have that, they can't complain, man. They should be well looked after by that point. And if we go to the holdings at the moment, I just wanted solid, stable companies that I trust is going to be in there for the long term. So we've got Visa, we've got Walmart, we've got Microsoft, we've got Target, we've got Apple. Apple, I don't think needs much explaining. Apple, I think is, Apple's already, I read a stat today that Apple's been around for 40 years, like 40 years. I didn't even realize Apple's been around for so long. Like, obviously, when you think back now, it has been, of course, when you think about the old Apple Macs with the big color backs and all sorts and that. I weren't trying to rhyme, but just poetic out here, innit? But Apple's been around for that long. So, I sometimes see it as a new business, almost not a new business, but a business that's been around since, I don't know, let's call it the mid to late 2000s or whatever. But no, it's a business that's been around forever. So I think it will continue to do so. Target, I think they've got an e-commerce strategy to try and, become more digital. And I think, from an American market share standpoint in terms of retail, Target and Walmart are really unbeatable from that perspective. So I think they've been there forever, and I think they'll continue to be there forever. And that's the reason why the Kiddies Fund is a much less riskier fund for me. It's a fund that I don't want to take too much risk with it. I want the money to at least be preserved, and to keep being there. I also want some dividends. So with a lot of these stocks, I get dividends. Visa, Walmart, Microsoft, Apple. I believe Target plays the dividend as well. So those dividends will get dripped, you feel me? And that's just reinvested back into the portfolio. Microsoft, I don't need to go too much into Microsoft. I think that doesn't need much explaining. They seem to buy up everything. Do you know what I mean? Buy up GitHub, buy up LinkedIn, buy up TikTok. They want to buy everything. Do you know what I mean? So they'll just be here just by virtue of their acquisitions alone. When new businesses come out and, Microsoft eye it up, they got the cash in their books is filthy, mate. Do you know what I mean? So even if their products start to fall, which I don't think it will, I think they will improve their products over time. They'll just be buying things up. And Visa, because I think, I've got Square and PayPal and my other portfolios, and you know what, if I'm honest with you, I believe in them more as payment businesses in terms of where the future's going. But I just think some of these incumbents like Visa and MasterCard, I struggle to think that they're actually going to be taken away or not. I think they're just, if ever we get to a truly digital world, then maybe they're gonna be slightly different. But ultimately Visa and MasterCard are digital anyway, and they provide all of the payment services for pretty much every debit and credit card out there, bar the ones that are American Express, etc. So I think that's going to be good. And when I looked at the fundamentals, I think Visa was slightly better than MasterCard, although I say that, I do like the MasterCard CEO. I buy into people, do you know what I mean? So if you are a person that I believe in, and I believe you're an intelligent person, you're capable, I like your philosophies, I like what you're saying, I read up in your interviews and so forth, then even if the fundamentals aren't perfect, I might be swayed by you as a person. And that's, you might think, oh, that's maybe not a good way to analyze it, but I think it is. Like, look at Dragon's Den as an example. Like, when they're investing into ideas, how many times on Dragon's Den do you say, you know what, you're very investable, but I just don't like this business, or you know what, this business is okay, but you know what, I trust you as a person, and that's why I'm getting into it. Sometimes you've got to take the risk on people. Now, I've only got 5 holdings here. I probably will add more holdings, but at the moment, I'm more than happy with the allocations that I've currently got. Maybe I might reduce Visa's allocation a little bit and raise up either Microsoft. Actually, probably raise up Apple's allocation. Apple's only 10%, which I'm very surprised of doing that. So I might change the allocations here slightly, hopefully to get a better return. But yeah, I'm happy with the Kiddies Fund, 2.72%. And we've got 18 years to go, man. And if I'm still doing portfolio updates in 18 years, then boy, that's an achievement in itself. So however this portfolio ends, I think just for the fact that I would have had a YouTube channel for 20 years by that point, and I would be well into my we don't need to go there, then yeah, that's going to be very, very interesting. But yeah, that's an overview of my portfolio at the time. I hope you found this interesting. From next week, obviously we won't go into too much detail like we did today on each of the individual pies, but I'll just give you more of a lighter update on how these pies are doing and my portfolios are doing. And yeah, if I add new pies, if I remove a pie, if I remove or change holdings within a stock, if I'm not feeling something, then yeah, obviously I will update you on that at the moment. But yeah, hopefully you found this video useful. Hopefully you found it interesting. If you did, get in the comments. Please hit that like button. Please subscribe to the channel if you're new. And yeah, I will catch you next week with another Trading 2-1 Tuesday. Take care, have a good evening, and peace.